Welcome to Markets Now. I'm Michelle Rook with Brad Kooima with Kooima Kooima Varilek, and we're seeing a mostly lower grain trade this morning over in the livestock futures. Cattle trying to hold on to some gains here. The hogs have been two-sided already this morning, but Brad, obviously we're going to start off with cattle. A really ugly day last Friday. Was it just because of the thin volume that we had, or what was going on there?
Well, thanks for having me on, albeit I just about turned you down, means that, I have to try to make sense of that debacle on Friday. And I'd be the first to admit that there are plenty of days where the market doesn't make sense to me either. At least Friday was one of those days, to be a little lower would be one thing on a day where traditionally it used to be that was the slowest day of the year if you're a commodity broker. So I think you still, traditionally have a lot of people sidelined. Some of these people that I network every morning, guys that used to be on the floor, people located in the South, brokers, a lot of them were gone too. And, a couple of them made the comment, well, I guess if I'd have been there, maybe I'd have tried to do something. I said, well, maybe you're lucky you weren't there. Some of it is that. And you say, well, what do you mean? And I guess what I mean is, how do you have that kind of volatility? How do you have that kind of volume of trade without a significant change in open interest? 1,000 cars is nothing. Okay. That's about what the open interest was up. I would have not been surprised that open interest could have been down 7,000 or 8,000, that all the longs were blowing out. That's how it felt, So how does that work? Day trading? Yeah, that's how the algos live. That's how the HFT, high frequency traders, live. I think that the daily ranges are too big. I think that that allows more volatility than the market needs. And those type of systems are built on exploiting that kind of panic type trade, which is what we had. Some days, and this sounds terrible, but some days the market acts like a flock of starlings, right? I mean, where everybody goes off in one direction for a while. I was hoping that flock of starlings will head the other direction here today. We're off to a little better start. I really thought maybe we'd get maybe half of that mess that we had here Friday. Maybe we get that back here today. December cattle should not, and historically have not ever been this big a discount to what the cash is at the end of November than we have right here. So maybe if we can get our legs underneath these things, get a little better here. I hope so.
But talk about the technicals, because we're back to mid-May prices. So how much damage did we do to the charts?
Oh, we killed them. Now you started your fourth wave down. Now to paint something optimistic, because I would rather be a glass half full person and still think that the fundamentals suggest that we don't have a burdensome supply of cattle. So you had the third gap down on December cattle Friday. Often that's the way big markets go: breakaway, midpoint, and then an exhaustion gap. So we did have our third gap. Maybe that's enough. Fishing back here on the charts from earlier this year, seeing if there was something that stuck out to me there. And I couldn't help but notice that December cattle back in April, basically the whole month of April, we traded from 170.40 to 172.85. April is a time where seasonally would be the first time to make a high. I remember that we rolled it over for about 4 weeks and thought, well, I suppose that's it. Had a little setback. And then in the middle of May, come whipping out of there and never looked back. It's kind of ironic then that maybe this is enough, because we're all the way back to where the big move started, higher. And I would say that that's enough in my estimation, that the market's done enough.
And of course, the break in the futures also kind of pulled the cash down with it. What are you thinking about cash this week? And, what is your advice here? I know you believe that producers need to stay as current as possible, don't they?
And that's going to be a big challenge for all of us. Certainly the futures broke the cash. Anybody that thinks that futures don't impact the cash is I would disagree strongly. Right. I would say, there was cash yet Friday morning here, 177 to 178. I think if the futures recover, we could be close to that. Steady would be a win. I think there are some that think we're going to be closer to 175. I'm going to go out on a limb and say maybe we're going to be just a little bit better than that. I would like to think we could get back to someplace in that 177 slot where the South was last week. But you bring up a point about being current. I really thought that through the spring, summer, and most of the fall, that was a real key to our success. When you're current, you have leverage. And, the Packer got some leverage back by slowing the kill. And and slowing the turnover rate. Average weights have come up a little bit because of that, but also because the weather's been really good. So if whatever we can do to stay current. Now, feeder cattle have come down quite a bit. To me, it makes more sense. I know the corn's cheap. I feed cattle. I get it. But let's not get into this 2015 routine here where we just fought the market and ended up with a real wreck by the time we were through with 2015. It lasted all the way into 16. So let's trade it for something that feeds cheaper and has a better break even and get on down the road. I know it's easier said than done, but I would encourage us to do that.
Yeah, that was the question I was going to ask you, how difficult it was going to be to stay current with these lower corn prices, and you just answered that. Hogs, two-sided trade already this morning. You and I have talked about, hogs rally on the back of the lower or the pullback in the cattle market here, but now where do hogs go?
It's hard for me to scare up a fundamental that makes me like the hogs, unfortunately, guys, if you're a hog trader. Average weights
cutouts have been going down, haven't they?
Yep. Average weights are way above a year ago, I believe 3.6 pounds or something like that. So we're not very current there. The China thing does not give off a good vibe to me, given the price of what their hogs are there. It would tell me that maybe they got plenty of them. So then you worry about what if we get into a less than perfect export demand scenario. Now to get, to shout from the treetops here after an $8 break in about all of 3 days, one would hope maybe you could get a little bit of a rebound here. But the only good news is that I can't come up with any on the hog thing. I just don't like the way the fundamentals feel, and the time of year is not great either, of course.
Yeah. And what about the grain trade? Let's talk about the corn market. Obviously, it's been kind of held prisoner here by, more bushels than some anticipated, but also new contract lows in this wheat market are certainly not helping, are they?
Yeah, I was hoping that, the stuff's worth something, right? I mean, even though we certainly lack good news, at some point, you would like to think that, we got the crop put away now. Let's see if we can entice somebody to sell it by rallying the market a little bit. It's at full carry, yada, yada. But yeah, the fact of the matter is, at least in the Western Corn Belt, this crop is a lot better than what they thought it was going to be. And through a lot of the areas of the Dakotas in particular, story after story that I continue to hear about, elevators that really aren't even too crazy about taking your corn unless you'll sell it to them. That's how big the supply is. Basis, some areas over $1. That's ugly. So the wheat thing is certainly part of this problem. We went from, it was always hard to rally wheat because they raise it everywhere, right? And there's like about 4 different seasons. It seems like it's always in season somewhere around the globe. And now we've all of a sudden got where it's pretty good everywhere. Obviously, Ukraine thing is quieter than what it was. I wished I could give you a scenario that makes me think that there's a big move here. South American weather, that's what your last hope is, that there's something happens enough to create an issue here with the oil seeds that maybe would drag the corn back up. But sure doesn't act like it today. New contract lows here while we're talking.
Yeah, and obviously soybeans, we had a few rains in Brazil over the weekend or over the holidays. And so is the market trading that or looking ahead at the forecast or what?
I think, the latest round of weather that we got here still feels to us like has a little bit of there's a little bit of threat to it. Okay. The area that actually needs the rain isn't getting it, and the area that's got enough has had some, but it's up for interpretation, of course. But if I had to just trade beans off the South American weather, it would seem to me like, as early as it is, that there's going to be a crack or two here where we're going to worry that maybe it's less than perfect. We could still get a little bounce out of here.
All right. Yeah. And we ran up into chart resistance there, I think, on on Wednesday and Friday. So that was part of it as well. All right. Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.